And welcome. This is Mary Ellen McGonagle back with your MEM Edge weekly show brought to you each and every Friday afternoon. This is the show where we bring you where the action is in the broader markets. Let's take a look at what we're going to be covering today. As usual, we are going to go ahead and take a look at where the markets closed. Very interesting couple of weeks while I have been away, down for the count with good old COVID, but back in the saddle here. We're also going to take a look at some of the top headline news this week, and news and headlines have been driving price action, certainly over the last several weeks at least. We are seeing shifts that are taking place within the market. Some of them could be monumental. So we're going to get in front of that. Also, take a look at some of the key areas that would make sense to pay very close attention to at this point in time. So let's take a look at some of those headline items that pushed the markets to great heights this week, and certainly not heights, but percent change wise, nice moves. First up, Fed Chair Powell, he was testifying in front of the Senate Finance Committee, and he made it very clear that he is on the prowl, on the path to do what it takes to fight inflation. That is the primary goal. So we did see quite a bit of bouncing there when the word recession was mentioned on Wednesday. That got the markets a little certainly nervous, but generally a recovery since then. And let's take a look at why. We did see weekly jobless claims. They remain at a 5-year high. While normally this would not be good news, investors and the markets are on the lookout for a general slowing in the economy. This is what the Fed is all about. They want to stem the high prices, and a slowing economy will do just that. Also, we did see new orders decline, and that was both for the manufacturing and service companies. Again, unusual, counterintuitive that we are cheering lower and slower growth, but that is the case at this point in time. The markets rallied in response. We also had consumer sentiment numbers, and they dropped to a record low. Now, consumer sentiment has been a data point for 44 years. We did hit that 50 level, and since this has been recorded, it is now at its lowest level. And again, good news for the broader markets, all about inflation worries, consumers pulling back in their buying. So, last up, we're going to take a look at some of the data points for next week. We're going to receive durable goods orders. That's going to be for May, Q1 GDP. This is going to be closely watched. It's still not a final number just yet, but it is one that is being looked at closely, certainly with an eye toward a potential recession, as defined by 2 successive quarters of a declining GDP. Core PCE inflation, another big report due out next week. It's going to be widely followed. That's going to be for May, so a little bit dated there. But also, we will get that global PMI number for June, and that's going to be all about global growth prospects. So, a lot to pay attention to. But let's take a look at what took place this week and some of the more relevant items that I'm going to be sharing with you here. First up, we're taking a look at a daily price chart. This is the S&P 500 index. You see a lot of these dart-like arrows here. I'll explain that in a minute. But first up, we want to see where we are. We're recording this just before the close on Friday. And a couple of metrics here. One is this bar for today. We're up about 2.6% as of now on the S&P 500, taking us close to 6% gain for the week. And we can see from my work, I have these moving averages, your green 10-day, your purple 21-day, red 50, and then your 200-day simple moving averages. And quite simply, I've gone ahead and highlighted previous broader market rallies. This is taking the S&P back to the beginning of this year when this downtrend began. And we can see, for the most part, a lot of these rally attempts went right up to either in the beginning, it was above that 21-day. And then as we got closer to a bear market, the S&P barely eked up above this 10-day simple moving average before faltering. Now, we did get two what are called follow-through days. That is a designation that I use certainly with my MEM Edge report to designate a potential market bottom. We got a failed follow-through day in March, and then a secondary failed follow-through day here in May. But outside of that, taking a look at these rally attempts as your first potential bottoming stage. So let's take a look at where we closed today. We are up above this green 10-day simple moving average. This is what I talked about in my MEM Edge report last Sunday in anticipation of just said rally, simply because we were oversold. Stochastics were down here below that 20, and then we had that RSI down here close to that 30 level. So fully anticipating at least some sort of a recovery or a rebound oversold rally, which we are seeing this week. But I'm going to share with you other dynamics that are making it a bit more interesting. So we are still below this 21-day simple moving average as it relates to the S&P 500. And ideally, as we potentially progress, you're going to want to see this broader market index rise above these, what I call barriers of entry, if I may. And so we can also see that the RSI, not quite positive yet. We're up here at 47. We're not above that 50 level. Stochastics turning nicely, but also remaining in that negative territory. So we do still have work to do. Let's just take a very quick look here at the NASDAQ, because the NASDAQ certainly has gotten beaten down quite a bit more than the S&P 500. However, with this index, we are now on the lookout for that follow-through day. And a follow-through day, for those of you not familiar, it is a systematic approach to identifying a market bottom. Not every follow-through day makes it. There are other characteristics aside from your chart, but the chart is that number one key component. So we are yesterday very close to getting that follow-through day. We did not get the volume. So we are on the prowl to see how we close the week. Do we get that follow through day? Now, ideally, we want to see these other outside momentum indicators in positive territory. To confirm that, we only need to see a follow through day in one of the major indexes to call a near term bottom in the broader markets. So not quite at the close yet, but we'll see where we close. Let's take a look at the underlying sectors within the S&P 500. This is where things get very interesting, certainly from my work. So what I've done here is the 11 sectors are listed here. I've gone ahead and added that relative strength indicator. It's in descending order. And let's take a look where that relative outperformance is. And we can see up here at the forefront, this is something I talked about in my last Sunday MEM Edge report, was the pronounced move relative to other areas into healthcare. And there are very sound reasons for that. I'll share with you one of them in our next segment here. But we can see healthcare, staples, real estate up here at the forefront, very defensive. And then as we move forward, we can see down in these weaker areas, take a look. Energy had been up at the forefront for most of this year, really fell out of bed over the last 2 weeks. And we can also see basic materials, industrials, and financials down here at this lower quartile on relative performance. For those of you not familiar, these areas are economically sensitive areas so that they will fare poorly if there is any signal or sign of a potential recession on the horizon. Hence, they are down here in this lower quartile. But let me from here take a quick pivot and share with you, because this is taking into account the last 5 days and beyond. It's not a single day view. So what I do want to share with you quite quickly here is take a look at today. Today was the day when we did get that economic data that is signaling potential slowdown in the economy. So hence, I'll go ahead and share with you a very simple performance related view of those 11 sectors and take a look. Today, Friday, up here at the forefront, financials, materials, and industrials, your economically sensitive areas, rallying the most today, while your more defensive areas are the weakest. And very interesting phenom here. I'm going to elaborate quite a bit further in my MEM Edge report this weekend as to what this signals and what to be on the lookout for. But very interesting dynamics developing here. So from here, I want to take a look at some of the underlying industry groups, those that are more impactful, more important to my work. I do tend to uh, focus on those higher growth areas, but certainly as the market warrants, I will jump into those economically more sensitive areas as well. But again, that RSI positioned here, descending order, and these are various ETFs. We can take a look at some of the more relevant this week. And this one I view, and I did talk again about this on my report last Sunday, that there was a move into biotech stocks. This is IBB, the Nasdaq Biotech ETF, and we can see a pronounced move back above this 50-day simple moving average. Nice double bottom action taking place here. RSI now nice and firmly in positive territory, with your MACD having that black line up through the red. So very, very interesting dynamics taking place. Biotech's not a normal area that would fare well in a what is currently viewed as a bear market, but lots of vibrancy taking place there. I'm broadening out my watch list among biotechs and healthcare in general. So let's go ahead and move on, take a look at some of these other big outperformers. This is IGV software ETF, and it was up 9%. That's 9.3 compared to the S&P up 5.9, NASDAQ up 6.8. So definitely a relative outperformer. So from here, actually, as we move on beyond these sub-industry groupings, I am going to share each of the individual FANG stocks last week and this week, superior outperformance there, and we are going to review those a bit further. But of course, Microsoft would fit in there and is a heavyweight in technology and in this software space. Other names as well that I can share a couple of them with you that are starting to firm up in that software space. From here, we can take a look at the yield on that 10-year, and you'll see that generally, by and large, it is pulling back. The 10-year, the yield on that 10-year is still above that 3% level, however, and we are seeing moves relating to that pullback because, as many of you know, as interest rates are rising, growth stocks, tech in particular, do falter. So a nice pullback here is helping those software and other tech related areas. So let's take a look very quickly. Brent crude still elevated. It's above that 100 and dollar. It's at about 109, but there is a declining phase taking place. Going to review that further into the weekend because we are seeing some vibrancy as it relates to these energy oil related names hitting key areas of support and potentially turning. One other area that would definitely need or bear a closer look are semiconductors. They're up nicely 4% today, but for the week up only 4%. So really struggling. This is a definite another economically sensitive area, regardless that they are in tech. So it's going to fall in line with those other areas that we took a quick look at earlier. And I believe that should do it for this area as it relates to taking a look at some of the underlying IHI. We can take a quick look at here. This is the medical devices ETF, a high growth area among healthcare, another outperformer for the week, up over 7%, but it still has work to do before turning positive. So from here, let's go ahead and take a look. I mentioned those FANG stocks, and I'm really guiding you toward these because, as mentioned, both last week and this week, a definite firming up. If you want to get a sense of whether the broader markets can really have a sustained uptrend, it is going to be these FANG stocks that are going to really be a key component simply because they are a high percent, a large amount as it relates to the weightings, not only in the S&P, but certainly that NASDAQ 100. So we're just going to take a minute here and kind of march through some of these names, what to be on the lookout for. Google was up 9%, and that was after being up 4% last week. So one of the strongest looking among these FANG stocks. This is a daily price chart, and Tesla is now in that grouping as well. It had a superior week, but let's take a look up above this 50-day simple moving average. RSI now positive this week. Nice black line up through the red. We're not quite getting those volume characteristics, but definitely worth noting because we have this nice double bottom formation taking place. We could conceivably see a rally up to this 200-day simple moving average should we see continued traction in Google. Moving right along, these are sorted by that relative strength indicator. So up here in the forefront are your general outperformers among these mega cap names. So quick look here at Microsoft, and it is just this today breaking back above that 50, same momentum dynamics taking place. Still has quite a bit of work to do, however, because when we are in a nice uptrending period, you are going to see, in this case, that 10, 21, and 50 also trending upward. This is a super, you can probably hear my voice getting relaxed discussing this nice uptrend taking place here. So first steps are going to be a break above these moving average, and then ideally a pulling up of those averages into a nice uptrend. But Microsoft up there at the forefront, attempting to reverse that downtrend. Amazon still has quite a bit of work to do. We all know about the numbers, guided lower sales, supply chain, lots of issues really holding Amazon back. Not one that I would really spend a lot of time with, but Tesla is a bit of another story. Tesla was up 13% this week after being up 9% last week. And for those of you that have that fear of missing out, do not fear, because when Tesla gets going, you will have ample time to get in. What we're looking at here is, again, that nice double bottom formation broken above these shorter term moving averages. We still have hurdles, but your outside momentum indicators are definitely heading in the right direction. So let's take a look. I want to see what other names among these FANG stocks that really make sense to take a look at. Meta Platforms, not really much to talk about there. We can take a quick look at Apple, because we have not looked at Apple, and that actually that is not Apple. So let's go ahead and pull up the daily price chart of Apple, and we can see this is another name that has been struggling of late, not showing the relative outperformance we're seeing in certainly Google, Alphabet, Tesla, and Microsoft, but we can see that it is in the throes. It's now back above that 21. We've had these other downside or upside rally attempts that have failed, not quite positive on the outside momentum indicators. So I am going to leave it at that. For those that have not already, please use that link below. You will want to trial my MEM Edge report, a very nominal fee for the next 4 weeks. Lots of shifts potentially taking place beneath the surface that you will want to be aware of. And certainly if we get bullish, I have a healthy watch list of stocks that I'm ready to add to the suggested holdings list. So do use that link below. Everyone, have a great weekend, and I'll see you here next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.